Welcome back to the Economic Analyst channel. In this video, I'm going to give you an update on my outlook for precious metals in the coming years in relation to the U.S. economy and it about going into recession in 2024. Without further ado, let's get into this. So to start with, let's begin with gold. Gold's price compared to its valuation has tracked largely with it, except for in times of strong bull markets, such as what developed in the late 1970s and in the late 2000s going into the early 2010s. Other than that, mostly it will track with the valuation chart metric that I have created, which I developed for the sole purpose of being able to analyze and forecast gold and silver's precious metal performance in track with macroeconomic fundamentals, much the same way of what I've done with the stock market and other videos that you have seen me do in the past. Silver, of course, follows the same behavior as gold, but silver tends to be more volatile. So you'll notice that during the bull markets, very powerful bull markets, silver can trade at multiples beyond its fundamental value as I use to calculate it. And this has happened twice in U.S. history. But is that going to be the case that develops in this next couple of years? Stay tuned for the next slide on this. This is my gold and silver forecast. So overall, I'm not giving a strong outlook as far as a bull market developing for gold and silver. Instead, I think what we're going to see is more of just a general uptick in the prices due to several key factors, okay? So one of the factors is the money supply. The second factor is the dollar value. And the third factor is the stock market capitalization to its valuation. Those three metrics tend to be the biggest factors that affect the gold and silver price. And then silver has one other factor that I think affects it, and that's copper, or really producer prices, because silver tends to have more industrial use than gold does. And so trying to factor in those two forces, the monetary and industrial force, gives you more of a better outlook, I think, on silver than just treating it as a sheer monetary metal. In any case, what I'm predicting here for the next couple of years is gold to have a 20% increase in its value from where it stands now at just under $2,000 an ounce to rise up above $2,300 an ounce in the next couple of years. Silver, on the other hand, is valued higher. It's at over $25 an ounce, even though it's been trading below that because of spreads on the silver prices, especially in the physical market. But it's only going to go up by say 15%. Yet, if you looked at my past two videos, silver during strong bull markets will outperform gold. It just doesn't seem that we're going to have the ingredients there for a powerful gold and silver bull market unless if something severely destabilizes in the U.S. economy. So let's take a look at the factors that are affecting this gold and silver forecast so you get a better understanding of where I'm coming from. Let's start with the money supply. As I've covered in the previous videos, the money supply is undergoing an unusual phenomena. Starting in 2022, the money supply has actually contracted, and it is very rare when the money supply would contract for longer than a year. So I'm kind of projecting out what I think how the money supply is going to behave. And I think that as the Fed stops raising interest rates sometime in 2023, that will start resuming credit creation and new money creation, especially if the Fed has to lower interest rates and print money to inject more stimulus in the economy as the U.S. economy enters recession in the latter half of 2024. And that's going to be that's going to put upward pressure momentum on gold and silver. Looking at the dollar index, this is another factor that affects gold and silver because these are global commodities, okay? So the stronger the dollar is compared to other currencies, which is what this index shows, the lower the gold and silver price would be in terms of the US dollar right now. And as you can see, over the last 10 years, the dollar index has been in a very, very powerful bull market right now. And there's no reason to suggest that this bull market will break down, especially in the wake of unprecedented monetary stimulus in 2020 and 2021. And that did not derail this bull market in the dollar index. It will take some very, very powerful economic and global forces to shift worldwide investment away from the dollar, and that's going to be a bearish outlook on gold. This is my projection on what I think how the dollar index is going to behave, and I'm just using basic trend analysis. So for the last 10 years, the dollar index's bull market has been sort of trading in this channel here, and I think that it's going to largely continue. And so we might see a little bit of a dip right now going into 2023. But as the economy starts to slow down in the United States, we could easily see a rebound in the U.S. dollar as investors all over the globe, as well as at home, starts purchasing U.S. bonds, shoring up the value of the dollar. The last thing, and the trickiest part, is the stock market capitalization to valuation, okay? So I've created an interest rate valuation tool that values the stock market, and the stock market will trade relative to that valuation, and that's what this chart shows. And what tends to happen is that there's a threshold line of where if the stock market capitalization to valuation trades below this line, it tends to be bullish for gold because it indicates that the stock market is not seen as a strong investment tool for investors to park their money. And so the alternative to that is gold. And it already takes into account interest rates relative to the stock market. So interest rates are already off the table, which leads really one other major asset class, and that's precious metals. So during the 1970s, when we had a low stock market capitalization to its interest rate valuation, this was very bullish for gold, and I think it was one of the primary reasons why we did see such a strong bull market for gold. So as this capitalization started to fall relative to its valuation, that put upward pressure on gold because it signaled that investors were taking their money out of the stock market, putting it in a different asset class, that is precious metals. But unfortunately, what's been going on is that post-2008, largely we've been in a more of a bearish signal indicator for gold as far as the stock capitalization to valuation, meaning that stocks are more highly capitalized. There's more investment in the stock market than even what ultra-low interest rates should suggest. So that combination is the reason why I don't think we're seeing a bull market develop in precious metals. And I think that's the major reason why my prognostications were off on a precious metals bull market developing in 2022. I was really expecting the stock market to go through a stronger correction than it did based off of the Fed's tightening of monetary policy, and we just did not see that. The last thing that we need to look at is for silver is its industrial value, which I have derived from the copper price. So you can see here that whenever copper tends to go through a strong bull market, that also tends to put upward pressure on silver because the two both have an industrial use. Now, copper is it has a much wider use industrially than silver, but this represents half of the component of silver. Silver has a monetary use and an industrial use. And only by combining the two together do you get a proper outlook, I believe, on silver itself. So where do I think copper's price is going to behave? Well, mostly I think that copper is going to drop in price from where it is now. And the reason why is because we've been seeing a lot of deflation happening in the producer price index as the slowing money supply and higher interest rates has built up savings, dropped down consumption, which has reduced demand for copper to be used in production right away. Now, this can change as we start to reemerge from the recession in 2024, especially if the Fed decides to lower interest rates. But right now, I believe that copper will maybe have a little bit of a bounce back in the run up to the recession. But once the recession materializes, it will most likely drop in price, much like it did in 2008 and like it did during the fracking boom that slowed the economy temporarily in 2015. So because of that, that's the reason why I think silver is not going to go through a strong bull market either in the next couple of years. And I wish I had better information and a better outlook on precious metals. It's not that precious metals isn't the play. compared to the stock market, precious metals are going to stagnate for the next couple of years, especially as we enter a recession. But it's just that we're not going to see any powerful plays to make widespread wealth gains just yet. Guys, thank you for watching this video. If you like the content that I provide you, please like, subscribe, share my content. You have my full permission to do so. And as always, drop a comment. Let me know what you think about all of this. If there's something that I'm missing, if there are points that you want to make that I didn't cover in this video, I'm all ears. I'd love to hear from you. And I'm sure the rest of the people in the comment section would want to as well. Once again, guys, I thank you for watching this video, and I'll talk to you next time.